Hey guys, Boris Schlossberg from BK Forex. Welcome to our daily technicals. The key question for 2513 is: are we still in the correction off the rally from last week? Past performance not indicative of future results. Trading Forex carries high level risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. And before deciding to trade any such leverage products, you should carefully consider your investment objective, level of experience, and risk appetite. Possibility exists you could sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided here, should not be relied upon as substitute for extensive independent research, and which should be performed before making your investment decisions. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon unique situation before making an investment decision, and should tailor the trade size and leverage for your trading to their personal risk appetite. We will not be responsible for any loss incurred in investments made by readers and clients as a result of any information contained here. It will not render investment, legal, tax, or other professional advice. If such advice is needed, please seek professional help. So, story in Asia. Let's start with, I think, the key event risk in Asia, which was the Aussie dollar. Aussie dollar had a kind of an interesting trade. I'm going to go through this a little more granular. This is the 4-hour chart, but let's look at the, let's actually just look at even at the 15-minute chart for the day just to see what happened. So, RBA comes out, as expected, no change in the rate hike. This causes a minor spike up in the Aussie, and then we have a sell-off on essentially what should be relatively bullish news in the sense that the fact that there was no rate cut is obviously modestly bullish to Aussie. The fact that you had a sell-off on that is a very bearish development. So sell off all the way down into the 104s with tests like 103.95s, and now we're kind of basing it right off the sell-off, which basically suggests that right now this obviously is the absolute resistance level at 104.50, but it suggests possibly that if we break the lows here, we have much further to go. If we go look at the 4-hour chart, we can go right back towards testing the 103.50s, which happened yesterday, sort of 103.60s. That's the double to double bottom. What's interesting and what's kind of very bearish for anybody who's long Aussie is the fact that we have a continuous sense of lower highs here, and even on a micro level here, we're starting to make lower highs. So in order for us to really break out of this negative pattern, we need to break this 104.50 to the upside. If we can't take that out, the path leads resistance really takes us all the way down to 103.50 as this very bearish reversal candle kind of signals that the market wants to go down versus going up at this time. So Aussie very much a look to. This obviously also created a lot of interesting changes in the Euro Aussie. Euro Aussie was getting liquidated all day long yesterday on the fear back coming back, and today what you're seeing is essentially a support level at 129.00 and a reversal back up. So the key question is, if the Euro strengthens back up during the day, you could go right back and retake the 103.100, 103.50 level. Euro Aussie comes right back. So the longer term trend in the Euro Aussie remains intact, as we seem to have found support here at the 129.00, and this obviously still continues to be negative Aussie. Euro story in the Euro was interesting. We came all the way down. We broke the 3500s as we noted yesterday. Came all the way down to test. I think it looks like 34.57. It was really a pretty good test here, and there were buyers. I think somebody mentioned that there was a central bank bidder at 34.50s, which was the natural support level here. This was the level that we kind of based out of yesterday, and of course we had a bit, a relatively strong rebound here. Now Euro is at a very critical juncture here. Yes, we tested 34.50, but if we come right back down, break 34.50s, that would be very negative. That would suggest that this whole rally over here gets completely unwound, and the next level of support isn't really till about 33.50. So this level holds. We could retake 35.50, perhaps even make a weak effort towards the 3600. For now, though, the jury is out, and unless we stay above the 3500, come right back into the 3400s, and a retest of the 3450s would definitely create a move back down to 33.50 on a break of that move. So watching the euro very carefully. Cable is trying to hold this 5700. This is really a key level for cable. Double bottom here at 5700, relatively weak recovery yesterday, Can't take out the 57.70 highs. That's the key highs here we need to take out in order for us to recapture 58. And even if we recapture 58, there's still an overhang above the 58 that it would need to overcome. But for now, it seems to be basing over here. Really needs a thrust higher in order to generate forward momentum. If we start drifting back to the 5700s, it could be yet another level of support. But a break here, the key level here is 5680. We break the 5680s, it's 5650 and downward from that point on. So cable very much worth watching here as the levels start coming into play. And lastly, the yen, which kind of played it both ways. Yesterday, we noted that 93 failed yesterday, and this was normal given the fact that we had such a huge run up in the move. The failure in 93 set up a profit-taking move to the 92s, but, and here's a key thing, 92s held so far and held relatively well. We've bounced back off of it, and actually the same kind of situation. The hold in the 92s helped us to hold the 24s in euro yen as we rebounded back relatively strongly from it. But the yen correction still staying in place right now until 93 gets taken out. So we could have this big bounce here, return back to 92 the second time, generally tends to create further profit taking. So a move back, typically the way when we have big thrusts up in the yen and then corrective moves, we have the first test and then the second test tends to be deeper. So for example, here's a move through the 90s. We had a move back down to 89s, retrace back out, and then a second retest of the 89s created a steeper move back to 88s. If we break through 92s, there's a very reasonable chance we can go all the way down to 91s as further correction goes on. In order for us to get bullish again, we really need to retake the highs 93. Right now, it's still very much in a corrective phase. So that's pretty much how the day sets up. There should be quite a lot of action into the U.S. session. I wish you guys the best of luck and the best of trading. Watching obviously the 92 level in the yens and watching the 35 level in euro dollar to see if both of those hold. To see if the correction is pretty much over or whether we have more to go as the day proceeds. Take care.